Welcome to AutoPal Software QuickBooks training. In today's video, I'm in the AutoPal demo account. We're going to set up a blank company QuickBooks and set it up sending over a chart of accounts, items, invoices, and go ahead and create some customers. Here in QuickBooks, I'm running QuickBooks Pro 2012. I'm going to do the Express Start and set this up. And just as an example, go ahead and set this up. Maybe use an S corporation, so on and so forth, and continue. Since I'm just doing the fake company here, I will not put in all the credentials. I'll just set up the company real fast. You probably already have an existing QuickBooks file, or you are creating one as we are in the training today. Once the QuickBooks file is created, we will link AutoPal's Webconnector to that. In order to do so, you go to the Tools, QuickBooks Live, and you can download your Webconnector and then the AutoPal QWC setup file for that. I've got my QuickBooks now opened and created. Basically, it's just a completely blank company, has basic standard chart of accounts, no customers, no vendors, a completely blank fake company. The next step is to go into AutoPal and download the file here. This will download my QuickBooks WC file. It's a Webconnector file. You can go ahead and save that file, and then you'll choose to open your QuickBooks Webconnector. You can do that by going to your Start menu and typing in Web. This comes standard with the QuickBooks install. If you do not have it installed on your computer, you should download the Webconnector here inside of AutoPal. It also has a direct download from Intuit's website. It is recommended that you run the QuickBooks Webconnector on the machine that has the direct access to your QuickBooks file. If you are doing remote access, you should run the QuickBooks Webconnector on the server or on the primary user's PC to access it. So now that I've downloaded that file, I'm simply going to double click to open it from my downloads folder. A pop-up will come up and it asks me if I want to grant access to this. I will say OK. This will then add in the AutoPal Webconnector app that we've created to communicate. The way things work is AutoPal will generate a statement, a payment, whatever it may be a customer create, and it'll send over to a queue. From that queue, the Webconnector will grab that information and post that over to your QuickBooks. Now the QuickBooks file is asking me, do you want to grant access? Our recommendation is yes whenever the QuickBooks company file is open, and continue, and select Done. This has then created the QuickBooks Webconnector and the application of AutoPal QuickBooks Integrator. You need to have both boxes, this box and this box, selected for the auto run to occur, and you need to put in the frequency you would like the auto run to go. We recommend every 1 minute. You also can go to the Tools QuickBooks Live, grab your password. That password will fall in the password section here, and it'll ask if you want to save that, and you select yes. I'm going to hide this Webconnector, and it'll automatically be running in the background every 1 minute. For purposes of the training, we will resurrect this Webconnector and select Update Selected, which would force that auto run to occur at the time of selection. At this point, we're going to go to our QuickBooks, and inside of the Tools, System Tools QuickBooks Live, you have a variety of settings of things you can do. Because I'm in the demo account, I'm going to clear out my queue, and I'm going to reset that any of these vendors have ever been sent to QuickBooks prior, so that we are fully fresh on both sides of AutoPal and on the QuickBooks file. Now that I've refreshed those, are these in QuickBooks? And it's saying no, as well as there's no accounts. I'm going to select to do QuickBooks Setup Complete, which will send over all of these items. If I pull up QuickBooks now and go to my chart of accounts, and then I grab my Webconnector, I can select to Update Selected. In the background here, you will see a variety of chart of accounts come in, and it creates those for us. And you can see as those occurred. In addition, you can see underneath your items and services, these items and services have been created for you as well to link with. Let me pull up so you can see a few different options here. Now that I have my QuickBooks file, it still is completely empty, no customers, no vendors. I simply have a chart of accounts and items and services. We are now going to send over some vendors. Select my vendor center and go back to AutoPal. Here, the vendors come from your settings, source companies. So whatever these source companies are, these would be a standard lender of ours, would be the dealer they're purchasing from, or multiple store locations. In the event of like auto loans, these would be auto dealerships you're purchasing loans from, they'd be sending loans to. In the event of our real estate clients or jewelry or payday or title loans, they would be different store locations or branches for you. If you come back out to your tools, you can go to the QuickBooks, and then Company QuickBooks Tools. Since it's not very frequent or common to send over a vendor to a QuickBooks, we have it underneath the vendor management directly of the tool rather than a separate function for it. You simply select to send a vendor, and it will send over these vendors to your QuickBooks for you. And now if we pull up the QuickBooks file, I'm in the vendor center, grab my web connector, force the auto run, we will see it create some vendors here. And we have KL Auto coming over, so on and so forth. It's pulling over their information. And as those get posted, they return IDs or vendor IDs to AutoPal, so we now know which vendor to link with. If we go back to AutoPal here, I can refresh this Company QuickBooks Tools tab, and it will then show a green check mark that these accounts are now in QuickBooks. That's the general setup. It's pretty straightforward and easy. What we're going to do now is we're going to create a loan and send that loan over to QuickBooks. So if you have further questions on the configuration or linking up your QuickBooks file, it is very intuitive and straightforward, but we do provide some tools here. You can come over and grab your wiki article, and you can go through. It will walk you setup process, step 1, how to go through it, add an application, or you can double click the download folder, and it'll take you through some screenshots of how to add this, and it'll go through some questions, some standard errors using QuickBooks Live Tools, and we'll go ahead and explain some of the chart of accounts and how all of these work for you as well here in this next segment or portion of the training. To do that, I'm going to come back here to Loan Manager. I'm going to create a fake loan account, and I'm just going to create it as an automobile loan as an example for us. I'm going to go ahead and drop in a VIN number for me and select the next setup. I'm going to link to an existing user in the system. Let's say if I can search for a fake customer. Of course, you could have, create your new customer or anything like that in the creation of your loan account, and then select Create Loan. In order to send an account over to QuickBooks, it does require certain minimum thresholds. It does require to have a customer name. It requires for the loan to be set up, and inside the QuickBooks tab here, you have to have this synced with QuickBooks box selected to send that over. In addition, to do a funding check, it must have a source company. This defaults to start with the source company, but the source company would be underneath Loan Manager, Manage Loan Settings if you wanted to select that after the fact, and it'd be your source company here. Of course, you can do all of that as well. You can do that underneath the Loan Manager when you're first creating your loan account. You can assign that information under your grouping options. You can select your source company. These can come from defaults as well. Once you select your setting defaults, for every newly created loan can start with certain defaults that you select for your configuration. But typically our clients will go ahead and have those set in for them as defaults. I'm going to pull up this fake customer loan. We'll go ahead and configure it and send it over. I'm on the initial setup tab of this loan account. Let's say it's a $5,000 loan with a $1,000 discount, $99 underwriting fee. Let's do a 19.99% interest rate, 36 months. Contract date here, 30 days out. Let's do a frequency of monthly. And then we can go ahead and select. This is kind of the default setups of the loan term configurations that are required. In regards to the QuickBooks integration, another very important one is the accounting discount split, yes or no. If you choose to split that over the term, it'll amortize your discount for the term of the loan, and the way that it'll amortize it will be based off your discount calculation. If you choose rebalancing, straight line, all of these have different calculations to them that you can select some definitions as to what those are here, and we'll go through that. But you basically can take some of our other trainings on how this works, but basically what we're choosing to do here is we're taking this $1,000 discount and we're going to put it into a deferred discount account, and then as they make payments we're going to split that over the term of the loan using a straight line calculation. So I'll go ahead and choose to calculate save. This will calculate the value for us, provide a standard teal box that we're used to, and lock in kind of the numbers for the deal. So I have 36 months of $189.47. Fairly straightforward. I can choose to activate a loan and lock in the terms of that loan account. Once it's set up, the next step would be to go to QuickBooks and choose to sync with QuickBooks. When I sync this account with QuickBooks, it'll say syncing account with QuickBooks, and it'll send over some transactions. Part of sending that over, let's pull up our QuickBooks account now and go to my customer's account, and I can choose to update selected or let the auto run automatically run. What it will do is it will create a customer account for each individual loan account. A general journal is the original funding check, and so this works out that the general journal does auto notes receivable of $5,000. The fake bank or the clearing account bank that AutoPal creates of $4,000, which was the original loan amount minus the $1,000 discount, and then deferred discount, which is set up as an other current liability account of $1,000. Had we chosen to have this be a discount split, no, this deferred discount would actually be selected to be discount income, and they'd be realizing this $1,000 as income in the period in which the loan was funded. I'm going to just close this out and not save that, so it'll save it that way. And then in addition, the invoice of $99 was the underwriting fee. If we go back to AutoPal and refresh the QuickBooks tab, we will now see that it says customer synced with QuickBooks, and we have a few other things. This particular account chose to have a documentation fee charged upon default for the creation of the loan. So let's go ahead and choose to run our web connector again, and you can do a variety of things. This will automatically update some different things as we do transactions and post that. I'm just going to choose to post that documentation fee on that account and have this come over to QuickBooks. We can see our web connector running here. We created a $250 fee. You do not need to click fee to send those over. Those will automatically do so. But we can see now this fee is in QuickBooks. It has a delete associated. Let's go ahead and post some payments on this account, give you a little idea of how things work. If we went in and posted a payment here, I can come to my payments tab, select a log payment, choose my type of payment. Let's go ahead and have it be a cash payment. Let's say they paid $1,000 today, and let's do extra towards principal here. I can choose to process that payment. I don't need to do anything else. I can simply choose to update my selected here, or we can have the auto run occur. This would automatically send over the payment and anything else that needs to go on that account. We're doing a between periods loan, and so all that's going to be is a $1,000 payment, and we can see it's going to be $43.49. If we go back to the particular loan account here to go to the QuickBooks tab, we can refresh it and we'll see $43.49. It paid a fee and the rest went towards principal. This is an example of a loan that's on a between periods calculation. Between periods, by definition, will have the interest come due on the due dates. That means the white line for scheduled payment will have the interest associated there. Next, we're going to create a loan that is a between transactions loan. We'll come back to create new loan, hit automobile, put in a VIN number, and let me see if I have a VIN in already for ease for this. And we can go ahead and hit next step. Link existing user for purposes of the training, pick fake user. I'll go ahead and select this other fake one, and then we'll go ahead and create the loan. So I create this loan. We'll do very standard settings here. We'll do also this loan is $5,000, $1,000 discount, $99 underwriting fee. Let's do a 12.95 and 36 months. We'll do first to the first, and let's go ahead and pull this out to first here. We'll do frequency monthly, and in my configuration options I will choose to have the split. Of course, these can be defaulted. I'm also going to choose to have this account be between transactions instead of between periods, and I would like it to be a actual number of days in the year, which we'll do with slightly different, and you can use some of our other trainings to help understand the advanced configuration. I can choose calculate save. This will provide a standard teal box with these settings, which you'll notice are slightly different than the other one, $2.97 difference because of the actual number of days and the way that works. I'll choose to activate this loan, and this will set that up for us. We can then choose to go ahead and go to the QuickBooks tab of this particular loan, since we already have a customer and a source company, and I can choose to sync this with QuickBooks. When I choose to sync that account with QuickBooks, I'll pull up my QuickBooks in the background, update this, or let it run. Next time it run within 1 minute, it will create a new customer for us here. and then it'll create a funding check and an underwriting fee. So we see first, I guess we have a $250 invoice, which was upon creation, since that particular account has a default to charge a documentation fee upon creation. So it created that. It created a $99 underwriting fee, a general journal funding check for $5,000. So if we go back to QuickBooks here, we'll see how that's posted. Now if I was to go into this particular account, post a payment in the normal operation of this company, and let's say we do a $1,000 payment, and let's do that out for, say the 11th, and go ahead and post that. Since it's a between transactions, there will be interest associated with that particular payment. And even though it's before the due date, we'll update here, and we'll see that it brought through a payment and an invoice, and we can see a breakdown of how those things work for us. We can also go into our QuickBooks tab here, and we can see that we have a payment and delete payment, interest and delete interest, and see how that's associated. Let me go ahead and post out another payment on 4/5 or so, and we'll go ahead and see how that works with a discount. Lock payment, selected date after the first due date, which will have a portion of it be due for discount, and we'll go ahead and process that payment. Once we process that payment here, we can go ahead and update again. This will then create the additional payment, and we'll get an invoice, interest invoice for that period as well as we'll get a general journal for the discount for that portion. So we can see here we have a general journal of $27.78. That will correlate here, if I go to my QuickBooks tab, that will correlate with a discount of $27.78. The reason this first one did not have any portion go towards discount is because our calculation type we selected from the initial setup tab on the discount. Underneath the discount calculation was rebalancing alternate. If you look at the definition of that, the discount did not come due yet, and so it was not yet paid. The reason it did have a portion go towards discount here on the payment after 4/5 because the first payment already came due on 4/1. Notice one of the key differences between transactions and between periods is that a between transactions has inside of the blue payment all of the function of the payments, the discount and the interest and the payment. A between periods would have the interest portion be on the scheduled line and a function of when the payment comes due rather than when the payment is made. Now, one of our coolest things about the integration with our QuickBooks is that it will live update. And so if I was to go back and change this fee from $250 and maybe just remove it, well, a different amount would go towards the application. But let me come up with an example here. If I was to increase this fee so much that this payment only had a few dollars go towards interest, so say I increased this fee to $990, well, that would adjust. Since there's only $10 left over, that would have $990 to go towards a fee and $10 towards interest, and so it would update inside of QuickBooks the invoice here of $1809. It would change it to $10. Let's do that as an example. If I go to my charges, I edit this charge and change that to $990 and put in a reason for edit, save that charge. When I do that, this will update. Now if I go over to my QuickBooks tab and do an update selected, we will see the $250 charge gets removed, and it gets reposted with $990, and the $1809 changed to a $10, and then also it changed the following invoice to $707. So if we go back to AutoPal and refresh the QuickBooks tab, we can see precisely what occurred. I now have a fee here, the application, and how all of that's working, and the application of those. In addition, we could go in and remove things. So if I wanted to go in for whatever reason and just say delete, and delete the payment, the interest, the payment, and the fee, I could do that and pull up AutoPal, or rather QuickBooks, and update on this side here. We will see these transactions deleting, and so you just see them starting to come off with the numbers updating accordingly. This takes us back to origination where we just have the funding check and the invoice on that account. Let me go back to AutoPal here and do another example. I'm just going to refresh the QuickBooks tab or run the calculator. By definition, that will send some interest invoices over as part of how the integration works. And so if I update, we'll get some invoices. Those invoices, notice I didn't receive any payments. If I wanted to resend those, I can come in here and I could select either in each individual payment and fee to send those over, or just simply select all transactions, and that will send over. If I pull up my QuickBooks again and update, we'll see that these transactions get updated accordingly and go through and post out on that account. And it gets the full update on that account. To come back to another example, what I would like to do here is I would like to go back to this charge tab here, and I would like simply just to reverse this charge for $9.90 and put in a reason for reverse, and go ahead and reverse that application of how that applies. Pull up my QuickBooks again and update. Now keep in mind you won't have to pull up your web connector and select update selected. It'll automatically do that every 1 minute for you in the background as long as both of these boxes are selected for you. And so you don't need to be going inside of that and toggling between the two to see what it looks like and so forth. You can see that directly. So here we have a balance of $36.53.61. Pull up QuickBooks, $36.53.61. Keep in mind this is one of our most common questions or frequent questions about the integration with QuickBooks. This balance right here inside of QuickBooks does not equal principal balance. It's defined differently. Inside of AutoPal, a principal balance, it happens to match in this number because the loan is current and it's a between transactions calculation. But the principal balance is the principal portion accruing interest, plus there may be outstanding fees. So if there was interest that came due that has not been paid on a between periods, or if there were fees that came due that have not been paid, those would increase the balance total inside of QuickBooks, but they do not change the principal balance inside of AutoPal. Instead, what you should be matching, rather than matching principal balance, you should be matching the principal balance plus due fees and due interest on a between transactions. And so you can get that information by going to the loan summary and expanding out the amount due, and it'll show you the amount that's due. You could also build a custom calculation here of tracking out, a QuickBooks balance or something which your account manager can help you with. So that's kind of the integration with QuickBooks. There's quite a few other options of things you can do. Let's go back to one example here. Let me come into my payments and let me reverse these payments. And I'll just come in and say reverse the payment, and I'll say no, I'm charging a charge. Go ahead and reverse that, and I'll also reverse the other payment. NSF, charge a fee, yes. Go ahead and charge that fee, and go ahead and charge that there. If I pull up my QuickBooks, I can then run my web connector or just wait for it to auto run. We will see all of that update. Both my payments will be removed, as well as the application of the interest since those payments don't apply, and I'll get a new fee for the NSF fee that applied on that account. And that's really the integration with QuickBooks. It's pretty streamlined. It takes something that can be quite laborsome and take a lot of work to do, and it really streamlines through that web connector. For best results, we recommend that you run your QuickBooks in multi-user mode. Typically, it'll be an admin multi-user. If you don't have that subscription, there are some potential conflicts if QuickBooks locks your file for updates. There's a variety of ways that, like if you're actually working on that particular customer inside of QuickBooks and it's not a multi-user mode, then you have some problems that it might give you some issues. We do provide quite a bit of documentation and helps. Once again, if you went and pull up the QuickBooks live for the AutoPal docs, down here at the bottom, you can go through, do troubleshooting. We also provide debugging resources. You can get information about that here if you pull up your view log. This will provide a SOAP box here where you can go in and see your log of everything that's happening, and you can go through and see if there's any errors or the reason why those errors would be occurring. Most frequent questions that we receive on QuickBooks Integrator have nothing to do with AutoPal. They have to do with QuickBooks. People have questions about QuickBooks, how that works. We recommend that you talk to Intuit about that or use their form to go through that information and kind of take care of a few different things that way. Let us know if you have any questions. We'd be happy to help you, but this concludes our QuickBooks training.